Hello, welcome to the end of week review for this week. It's a wonderful Saturday here, so we just do the end of day. It gives us end of week review for this week. So this week we have 5 full trading day from Monday all the way to Friday, and a lot of action and a lot of economic news come out, especially on Wednesday and especially Thursday and Friday. We have a GDP data, and then we have a PCE data, which is related to inflation data. It's similar to the CPI data, but it's a subset, small subset of CPI data. They call PCE, Personal Consumption Index. That's where we have for this week. And this week we are in week 39, which is the last week. That's the last week of the quarter. Yeah, you can call, but next week it kind of overlap between September, October, right? So you can call it the last week of September right there, or quarter 3. And then next week it will overlap and we go to quarter 4 right there, last quarter of the year 2025. Very excited right there. GDP data, we go here to the website right there. GDP data, which is just released this week, September 25th. The next week gonna be October 30. The PCE data right there is just personal consumption expenditure price index, PCE right there, and they released on 26th, which is for on Friday this week, 26th, 25th. Both economic data come out right there, so we see a lot of big move. Start from Wednesday, we see that, and then beautiful all the way to Friday. Normally Friday you don't see much big move, but this Friday that's huge move, and we did trade on Friday. We did take advantage of that. By the way, we still trading in our our so-called practice accounts, because we blow up our account early in the month and we wait for the reset at the end of this month. So what we are at with our journey right there. But look in the, now let's go to the chart to see what we learned for this week. Look on the daily, right? Here's the daily, and we did mark out the Monday of the FOMC meeting. Is very critical. We see that we mark the range, and let's see how it's there. So for last week, you see that the Monday range is tested from below twice. So the Monday sets the range, and then Tuesday test from below, and then Wednesday test from below. You see that? Then boom, what happened? Thursday is rolling. It go up. It take all the liquidity right there. In this case, it's the buy side liquidity. So it go up, that means it take a buy side liquidity. It go down, it take sell side liquidity right there. Or vice versa. Buy side liquidity in the sense that people who short right here put their stop loss right there, they have to buy back. And if it go down, then people who go long right here have to sell. That called sell side right there. So they buy right here, they have to sell to exit liquidity. So that's in terms of liquidity right there. So you can see that how the markets accumulate liquidity. The market cannot move without liquidity. So you have to engineer liquidity. You have to consolidate liquidity, or for lack of better term, I think the better word is called engineer liquidity. So you have to manipulate is another word right there. Liquidity for it to move. Price cannot move without liquidity. So in order to move up, it had to engineer the buy side liquidity. So it can go up, and it go up in order to go down, because when it go up, it engineer the sell side liquidity. That means people go buy here, then it needs that liquidity in order to go down. So you see that prior week it built up, it go up in order to build up what? It built up the sell side liquidity, and you see that this week it take out all that liquidity. You see that the range right there, it come back into this range. This you can call it consolidation range right here, or support, or supply, or support, support, or resistance level. The level right here is supply, or support right there. But in ECT, he may call this auto block right there. When it come back here, it will bounce, and we can see that it's bounce on Friday. So you see that it dipped into this void right here, or fair gap in this case. It's a void gap right there. Start last week when FOMC meeting on last Wednesday. But it's remarkable that Thursday come all the way down there. We thought that it's gonna be go back to this. So this area can be if it come back here, I think it broke this. But right now it's act like a support level, or supply level, or demand level right there. That's the whole idea for last 2 weeks right there. So last week and this week, we say that it come back to this range. Once we understand this liquidity, we can see that's very easy to trade. Let's go back to the FOMC prior to that, to this month. So it happened on July. You see that the range, the Monday set the range right there. For this week, not for this week, for this month, it's very easy to trade for the range. You see that test from below, and you can see test from above also. But the minute you see that it broke to the upper range, then you can go long right there. For this, it's a little bit tricky, right? It break, it reclaim, and it break again. So when it break again, you can go short right there. There's no reason for it to come back again. The only come back is to break that range, and boom, it go down. And then the following week, is that right? Yeah, Friday, October. Then Monday, you see, boom, it reversed right away. And it go back to that range. You see that? It tests from below right there, and then boom, it break that range. And then it reclaim right away, and then it's break again, and that's where you need to go long. But remarkable, it come back to that range again, and it break that range. You see that? That's the range right there. Create for the first Monday of the FOMC. It's very critical. The market move around at that level. So that's one of the lessons we learned with that. So let's look back to another FOMC meeting in June 16. You see that range, the Monday set the range right there. And in this case, it tests this level right there. And although we thought that it gonna broke the level, but it's flip. That's where the magic come from, it flip. Because we thought that, okay, test from above, break it. Yeah, but it did not. It's flipped right there on the Monday, June 23rd right there. So that's the lesson we learned. We learned that the range set by the Monday of the FOMC meeting give us a lot of information to trade around that level. So you see that the Monday set the range, and then Tuesday it does not need to take the buy side of it in order to go down, and then boom, the Wednesday go down, and then Thursday it thought it go all the way down, but it boom. You can see that the Judah swing happened at 9:30 on Thursday. That's very beautiful setup, and we'll go detail into the chart, 15 minutes chart right there. But before we try to make that on the daily time frame, very easy to trade if we pay attention to the range set by the FOMC meeting or PCI also. PCI also give a clue. PCI and what else? FOMC, PCI. That's too big. Or the non-farm payroll, for that matter. Non-farm payroll. Let's put another in here for the non-farm payroll or the CPI. Right. Let's see the CPI right here. CPI with the yellow color. See that the CPI, and then is the FOMC. In this case, it really rarely operate there. Oh, you don't see the overlap, but for the prior periods, you see the overlap between the FOMC and PCI. Keep in mind that in this period you have two CPI because FOMC doesn't happen on August. So, but only you see the CPI come first and then FOMC in this month. June, they both happen. Following week right there. But anyway, let not go. We cover enough on these topics. Now go to the detail. Let's say go to the Monday. What do we see on Monday? So on Monday, here's what we see at the beginning of the Monday. So we see that's the last Friday, right? So we take this screenshot at 8:51. So we see that level right there. We thought, all right, it may what is break it, right, and test from above. We thought that it's gonna be reversed. So let's see on the 15 minutes what it looked like. See that? Yeah, so it looked like that it's gonna break this level. This is the high time frame, which is the daily level right there. So yes, that's the level. We thought that it's gonna break it. I test from above and then break it. In the London, it just revisit level, but then it come back up. Let's see at the end of the day what did it do. So here's at the end of the day right there. So it is the 9:30. We don't see it's revisit right here. So basically on Monday it become a buy day. Okay, we put a note. The Monday for this week is a buy day. Yeah, it's the buy day because you see that right into the 9:30 it start rolling, and it do have the retracement here, and then at 12 it continue to rolling. So it open 9:30 below the open at 18. And the London did take the low of the private, take a low of both London, both the Asia and the prior day PM right there, and then boom, it rallied. If you look carefully, you can see right here there are a set of that tell us that it's gonna be rally. You mark this level right there, you see that it break, right, reclaim, break, reclaim, break, reclaim 3 times. So that is the type 3 for breakout first right there. We do have that setup, and we call the type 3 double bottom in this case because it's a long setup. Here's our right up right there. So you see that level, it break, it reclaim, it break, it reclaim, break and reclaim 3 times right there. You only need 2, but in this case you have 3 of them, so that's very strong setup. So if we learn about this setup and get ready, then at 9:30 we go in and buy and let it run. You're gonna take all the buy setup up here, because this is one of the most reliable setup, because it takes time to build up for this setup to form. That means it takes time for the market to engineer a lot of liquidity, and when it engineers the liquidity, then it can reverse. So the type 3 for breakout right here mainly is for reversal. And I remember another people call this called crowd reversal right here, which is exactly right here. It happened. It break, reclaim, break, reclaim. They call crowd reversal. So let's look to see what else we learn from Monday. By the way, we want to test out the theory from this guy Triton. Basically, he say that if Asia consolidation, London manipulation, then the New York expansion. Okay, so for consolidation, we know that it means it in the range. Then London manipulation, we try to understand what he mean by manipulation. So he mean by manipulation is mean he go down or we go up. So if we apply his theory in this case, that means we do see the Asia is consolidation right here, the range right here. Then the London move right here, move and down. Then that can be fall into manipulation, right? Then that means the next step is he say that the New York gonna be expansion. Expansion in this case, it means that it go up, because this is, we have to see what he mean by manipulation right there. So let's say if the manipulation go up, that means it rate the liquidity, then that means that the New York gonna be go down. So that's the theory that, if we follow his logic right here. But I think it's a good idea to see if we test out this to see if it fall into this scenario. So let's say that here is the Asia consolidation. Then you see the London is what? The London manipulation, which you check out all the low or the sell side liquidity, then you see expansion or the reversal in New York right there. Then the other two scenario we have to test it out, but for this Monday, that's what we see for the first condition right there, for the first scenario. The second scenario and the third scenario need more back test right there. We test it, but I think it's a good model or good scenario that help us to formulate our bias right there. But anyway, the setup for Monday is beautifully. We just learned that. So remember, we have 3 kind of setup we trade: for breakout type 1, for breakout type 2, and then for breakout type 3. In this case, it's for breakout type 3 right here. Alright, so we just make a little bit verbiage right here. Basically, we wanted to break, reclaim, break, and reclaim. So this at least twice. That's the reason why the double bottom come from. But if happen more than twice, then that will be even better. So that's the whole idea of double bottom in this case. Similar is the long, you want a double bottom. But if in short setup, then it's gonna be the double top right there. So that's the whole idea. So this is the type 3. Remember we come up with 3 types of type 1, type 2, and this is the type 3. And this week, just Monday, we start already see the type 3 show up right there. All right, so that is the for Monday. It's a sell day right there. I mean the buy day. This is not the typical for the buy day. And how do we see that? We can see that we refer to one of the guy. He have the post that we share. Just review his observation right there. So if the Asia consolidation, the London manipulation, and the New York is expansion. Expansion can have 2 meanings. It can be expansion up or expansion down. So that's loosely meaning that we have to deal with. I wish that he can be more specific right here. But anyway, I think this case it fall into that scenario. Yeah, we have the Asia right here, right? Consolidation is right in the prior day PM, and then the London is go down and drift or manipulation right there. So rip the low of Asia and also the prior day PM, and then boom, you have expansion right in the New York IM right there. So we're pretty much confident that that is the scenario that he's talking about. We could be wrong, but let go with that assumption, and then in the next episode or in the next scenario, if something happened differently, then we can go back and modify. That's how we learn, right? We make assumption, and then if that assumption needs to adjust, then we adjust them. That's for the Monday. And we do take the trade. Oh, one thing we noted that you see that in this case, even though the double bottom happened around here, and we don't need the sell side liquidity sweep one more time. We don't need. You see that? It make a high right here, another a little bit high right there. So sometimes we thought that we need to rip one more time right here to get a sell side liquidity, but in this case it don't need. So the double bottom, sometimes if it already forming, the sell side liquidity sweep is not a requirement. So that another thing that we want to point out right there. Let's make a note right here. Right. Yeah. So note. In this case, it's sell side liquidity sweep. No, it's just optional. Right, it's not a requirement to take a trade. If they are perfect, if it's not, then it's not necessary. So it's an optional. Right, if we want it to go low one more time, perfect. If not, then it's still a very reliable trade, especially if this is more than double, it triple, then perfect. You don't need this. You don't need a sell side liquidity sweep in this case. All right, we just save this, and now go see. We did took the trade on Monday, and that review it. and review what trade we took on Monday. Okay, so we did recognize the double. We did not recognize the double bottom around here, so we missed this move. And then right here we jump in, we short them because I think we kind of we engage in this trade because we missed this trade, so we want to make up right there. Right here, it's not much setup, right? They get a little bit risky right here because after expansion, and you're gonna see test from above right there, and you're gonna anticipate because we mark right here is the last. I mean, it's the expansion move right here and the candle after expansion, so we mark that level. And we can see break and test from above, and they can be reversed. So that's our logic right there. But now we look back, and you see right here, yeah, you see that the gap right there, the feather gap right there. I think it's the 18, the open at 18 right here. Yes, so right here, we saw that level right there, and we thought that right here is test from above, break and reverse, so we short that one. Is that right? Yes, that's where our logic come from. But you see that is so we zoom in, we go long right here. Is that right? Yeah, we go long right here, and we have probably there. But if boom, okay, so we got so we got out, we take a trade right there. Let me see, so we short, okay, so we short right here, but also where the profit come from then? Very interesting. Let double check one more time. All right, so I think we see that the profit is there because in the Sunday opening, right, we saw this pattern, so we short them right here because it's perfect right there, right? You have a first leg down and the feather gap in this case, and then boom, it go up right there. You see that? As soon as it close up, boom, it's gonna come down. So that's the whole idea. We see the short setup right there. That's why we short them. Yeah, always look for the feather gap down, and then it come back to that feather gap. The minute it close above that level. In this case, is the level around 67.18. Then the minute is closed, then you can short right away. And that's the overnight trade we took on Monday. You see that is the on Thinkorswim, the other one is on TradingView, and you see the setup very clear right there. You see that? Test from above, break and reverse. That's it, type 2. And type 2 is go into continuation. So this is the first leg down right here, and this one gonna be continued, a next leg down. With that in mind, we short right away when we add more contract in there. Boom. Yes, so as soon as it go down there, I think we check out the profit. We get it, and we let only one contract stay in there, and then we move to break even. You see that? If we leave it right there, it still run, but we move to break even too soon. Not too soon, but if we want to stay more, we just leave it there. It will go to the level at 67.04. It will. You see that? It will. Yeah, it hit that level in the London right there. Yeah, it's a level. So that's a beautiful trade overnight. Now we see. Okay. Yes, look at the daily candle. Okay, so here's the next trade there for us when we do in the New York AM. So basically, we get this profit from overnight. No wonder we said, what if this is the first trade, where the profit come from? So basically, we short right here, my friend. And what happened? We add more, and then we switch into it is long. Yeah, we take a short trade, we get stop out, and then we decide to go long, and then we take profit right there. So two good trade there on Monday. Okay, so Monday we take two good trade, right? The trade long in overnight, and then right there is another long trade. We take short first, but we said, oh, if the short trade not working, then we trade a long trade. So totally. Okay, that's good for Monday. Now we go to Tuesday. So Tuesday is basically is a sell day, right? Monday is the buy day. Then Tuesday is the opposite, the sell day. Alright, here's the screenshot we take for the beginning of Tuesday. Exactly is at 8:29, right before it opened. On the daily time frame, you see that this is the Monday, right, the buy day. We didn't know the sell Tuesday sell day until the finish of the day, but at least it gives us a clue. You see that level right there? You see that is, you know, it tests from above the level, right? That's the level. And look at this level also. That is the level of the Monday range for the FOMC meeting. Look, pay attention to that level. And that's the daily. Let's look at the 15 minutes. We take beginning of the day. Where our 15 minutes? Okay, so our 15 minutes right there. So we see that how perfect is light up right there. You see, it's all consolidation. Remember the Monday, you have the Asia is consolidation, and London is what? London is manipulation, and then the New York expansion. That's the buy day right there. So for Tuesday, when we come out like this, we're thinking in our mind, wow, we want it to be a Euro swing right here. Take out what? Take out the buy side liquidity, which is the high of prior day, and then boom, it can reverse and go down. That's the first thing we have in our mind. But if we look carefully, we can see that at this level, what do we see right here? Do we see something similar to here? Right, which is a double bottom. In this case, it's gonna be a double top. That's right. You see that level? So that level right there is a break, reclaim, break, reclaim, break, and reclaim. So if it's gonna be break again, then you're gonna have a double top, right? In this case, it's like a triple top, pattern right here that is gonna be a huge short right there, and whatever the level right here, it will come down to this, around this level. That is, at first we don't see that, but now look back, or later on in Tuesday, we say, wow, that's a beautiful double top pattern right there. Let's do a drawing right here so we can see. You can see better the pattern of double top, which is break and climb right here. Let's do a little bit drawing and put some verbiage right there. Yeah, we did later on at during the day. At the end of the day, we see that pattern right there. So you see that level right there. Look a little bit deeper. You can see it break, it reverse, and then it break again. Right, there, it break again. You see the pattern, right? And it break, it reverse, and then it break, it reverse, it break, it reverse, and then boom, right here. You remember we say that. So earlier we want to expect what? We want to expect a euro swing to sweep a sell side. That's our anticipation right there, because that is a clearly scenario. But if we look carefully, we don't think that needed. Right? You don't need the liquidity sweep in this case because of the pattern, the double top pattern. It's like on Monday we tried to looking for a liquidity sweep in order for it to engage, but we miss that because you don't need liquidity sweep when you have the double top or double bottom formation. You don't need that. And exactly in this case, right? If we're looking for liquidity sweep in order to engage, we will make this whole move right here, which is a sell day. You don't need to, because if you observe, you can see that it is first break right here, and they have a fair value gap. Let put some verbiage on this one. So this is the first. It's a break, right? You want to break. Let write down right here. So what we have right here is 4 breakout and called type 3, right? We have 3 of them. Type 1 and type 2 is very common, and for this week so far we see that type 3 is very prevalent, right? It show up more frequent, and type 3 is happen in the case where the markets need more liquidity to build up for the next move, and that way you see a lot of back and forth. Just basically it's a nomenclature, right? That back and forth. So meaning break and reclaim and break and reclaim, and then the moment you see it test from above that level, in this case it shorts up, then boom, you go in, go short long, it's gonna break, and you see that it not break right away at 9:30 in this case, but it take another hour or so, 2 candle, half an hour. It take 45 minutes right here, and exactly 45, 10, 15 it break. So let's put the verbiage right here. So you want, this is a type 2 and also called double top pattern, right? Short is double top, but long is double bottom in this case. And the pretty thing is, know it here that we see that no, yeah, you can say no buy side liquidity. In this case, it don't need to hit this buy side liquidity. So buy side liquidity is optional, it's not needed in this case. Buy side liquidity sweep is optional in this case. In this case, you don't see it there. And also one thing we know is that if fair value gap in this case is a bonus right now, it's another confluent, let's say. Yeah, you can say it's a added, or what you call it, signal, it enhanced signal, right? It's a you can call it confirmation, not really confirmation, but it can be a we try to find a better word, early signal, right? So if you see the break level, then that's the early signal for us to get ready for it to be close above that level in a in a critical time and then it break. So that's let's go back on Monday to see if we see any value gap for the double bottom. Right here the Monday, so this level we can see value gap right here. Is a gap right there. Yeah, there's a gap right there, but it's not exact at this level, right? If you tell at this level, you can see that gap right there. It break and it reclaim, and you see that it break again, it reclaim, so that can be a double bottom right there. Then the next time if you go back to that level, then you can go long. So we choose this level, but if you choose this level, it still makes sense. So that's, but definitely there a gap right there. If you choose this level, you can see the value gap, but if you choose at this level, the value gap is not so obvious. So that's, so both there, the value gap gives us the early signal. Let's put a note right here for this. Yeah, so right here we just say fair value gap. In this case, fair value gap up. An early signal tell us that it's gonna be fair gap up, right? So it tells us it's gonna make a swing up, and they're gonna set up a fall breakout to the downside, right? It looks like it's gonna break, people go in and short that exactly, flip it reverse or reclaim right there, not the double bottom. So two idea right there, the liquidity sweep is no longer needed, right? In this case, you don't need to go down and sweep the liquidity. You don't need, because you already have the formation of the double bottom, and also you have a fair value gap, give you early signal. Beautiful. So let's say this one right there. Yeah, this is the Monday. So this is go back to the Tuesday. Right here, you don't need the buy sell liquidity in this case. No, it's optional. And fair gap down is the early signal right there. You see fair gap down right there. That what we see. So it is break, and then you have reclaim, right? That is the routine reclaim. Okay, and then you have break, and then you have reclaim. Keep in mind the break and reclaim can happen. If it happen more than twice, then even better. So it's even strong signal. That means when they break, it will break harder. So you have break here, and the reason why we put the arrow right here is a fair value gap. It gives out an early signal right there. This guy is early signal. Give an early signal that what direction it's gonna go. So it's gonna come down. It's gonna go down. In this case, but you have to wait for the query to engineer enough, then it's gonna make the expansion or distribution. So that's the whole idea. So you have break first, right, and then it's gonna be reclaim. In this case, number 2, we want to see, we number them so we can see how many times the pattern repeat itself. So reclaim. All right, reclaim. Yeah, so 3 times is enough right there, triple, but if you count right here, you have break and reverse again. That is 4 times, is that right? And then you have right here a break and it's reclaim again, that is 5th time, and then boom, you have test from above and it break right there at 9, at 10, 15, then boom, it's gonna be, the whole thing gonna come down. So that is a very typical for breakout type 3 right there. Keep in mind that for the novice trade like us before this, we thought that we need to wait for liquidity sweep, because if you listen to other people, you try to learn to trade, they always say, oh, wait for the liquidity sweep, then you can engage. But in this particular setup, particular scenario, you don't need it. That's the optional. If you look in the detail, you can see that the formation of the double top in this case, or the bottom on Monday forming, then go in and check the trade. You don't have to wait for liquidity sweep. To keep that in mind. That's the reason why we see optional. Why? Because you have a failure gap. Failure gap gives you an early signal. That's the beautiful. One thing we want to compare this with the guy he talking about the Asia and the correlation between Asia, London, and New York. Remember, like 10 minutes ago we're talking about on Monday. He said that if the Asia is consolidation and the London is manipulation, then you got expansion, which is on Monday is a buy day. But in this case, we have what? We have the Asia is consolidation. The London is consolidation also. So let's see what he say in this scenario. All right, go back to his post. Here's what he say. This is the scenario happened on Monday, and now on Tuesday, I think it fall into. We think that it fall into the third scenario right here. Both. Oh wow! In this case, there's expansion. So it does not cover this scenario on Tuesday. Right here, you have both Asia consolidation and London. So that one not really covered in this case. For Tuesday. So forget about it right now. It looks so like very interesting, but so many. We want to keep our trade as simple as possible. Right? Sometimes we see other theory interesting, but try not to add too much. Just keep the idea right here. So as soon as you see this setup, then just take the trade. Right, just take the trade. I believe let's just see the trade we took on Tuesday. We do take the trade on Tuesday. So here is we take screenshot and the daily. Right, so you see that the Monday is the buy day, and here's the open at 9:29. Okay, so perfect. We take the trade. We see that level. We see that wow, it's right there. There's no level. It touched my break. Perfect. So we go in. We short right here, and it's the time is at 10. At 10. Okay, let's see how it's play out. Boom. Wow. It flipped on us right there. Oh wow! You look at the 1 minute. Is that 1 minute? Yeah. 10:03 and 1 minute looks so good, right? It looks so convincing. But a minute later, 3 minutes later, you see it flip on it right there. Perfect. It's okay. Right, we check our chance right there, but don't give up right here. And right here we switch to long. I think that's where the mistake may have been taken. We said, wow, if it not go down, then definitely it's gonna go up. That's our beautiful logic. And here's we take a screenshot in the Thinkorswim, but the minute it go to 10:15, it sweep right there. See that? So we did sweep to short, but here is the, yeah, so we in the trade right now, in the money, and we should let it run, right? Because the Saudi, we didn't know at that moment, we didn't know, so we underestimate that how low the market can go. See that if we leave all right there at 67.35, it came all the way down here. It came more than that if we look at the swing side. You see that right here, that level we put right there, hit our target, it more than that, it doubled that. You see that? But it's okay, we learn, we lack experience right there. We look a little bit, it's in our favor, it run exactly, but because we take a big loss the previous trade, it kind of impact us. So that's the beauty of trading, that you need to reset your mind. Don't let the experience of previous trade impact. Yeah, this one, it must easy said than done. It takes practice. I said it takes practice. So we should stay in the trade as long as we can, but we're not there yet. So we got a little bit chicken right there. You see that? We take chicken right there. We exit the trade early. That's it. We take the trade early. We should let it run. We can make all the gain back, all the loss back, and we double our money. But anyway, you see that? That's anyway, yeah. So by the time of 12:30, it's already go to that level of the Friday, the last Friday, right? The level of the Monday is break the level, and then boom, it reversed right away on Tuesday. So we did took a very good trade, but we didn't let it run, and we little bit engaged too early for the previous trade. This way we take a big loss, and that the experience of that big loss really impact the way we should stay in the trade longer when we're in the right direction of the markets. So that's a huge lesson we learned on Tuesday. So basically on Tuesday and Monday is the reverse. Monday gives you the double bottom setup. Keep in mind you have a fair gap up, no liquidity sweep, and on Tuesday the reverse happened. You have a double bottom, double top, no liquidity sweep needed, and you have fair gap down. Okay, now let me move into we speed up a little bit. We move into Wednesday. So here's our Wednesday. Here's low, right? You see that level, and we anticipate that it may gonna come down to this level. See that? So let's see how the Wednesday come down, right? So let's see. We took the trade on Wednesday. Let's see. Here's the trade we took on Wednesday. So we don't engage right away, but we engage around 10:30. So in this case, we go long. How did we go long right here? Very interesting right here. We go long because what's set up for to go long right here? We don't see why we go long right here. Let's see how we play out. Boom. So it go into yeah, so it goes to our favor. Let's see if we take profits or we did not. Boom, we did not take profit. That's our mistake right there, and come back and buy it right away. So we take a lot right there, and then boom, we switch to short. Okay. Alright, it go into our favor. We did take the early profits right there, so we recover the loss, and we have some green right there, and boom, we out, and then I think right here we take a long trade. Okay, boom. It's weak to, we take a lot right there, and then we go back to short again. Okay, it goes to our favor, and then it hit to the high time frame daily level. We out. Oh, we good right there. Let's see that. Oh, we engage again. We go long. Okay. Oh, we go. Oh, okay. Boom. We out. Quick profit. Hey, right here. We go long because right here we see the setup rate. This is a double bottom in this case. Is that right? Break, reverse, break, reclaim or reverse, and then break again. So we go long. Oh, that is the very interesting story right here. Boom, we take profits. Perfect. So that's our Wednesday. But look at the chart on Wednesday. Let's see what we learn. Here's the beginning of the day. Okay, do we have at the end of the day? Okay, for some reason on Wednesday we forgot to take the swing shot of the end of the day. Nowadays we do both the beginning of the day and the end of the day. Actually we can go to the chart and do it now. Alright, here's our write-up for Wednesday right there. So for 3 days in a row, from Monday to Wednesday, we see a lot of the 4 breakout type 3 happen. Right? In this case, it's the continuation. Continuation on high time frame because the Monday is the buy day, and then the Tuesday is the sell day, which is reversal right away. And then on Wednesday it continued the trend set by Tuesday. That's which why we put the continuation right there. Which is, you look here, you see that is continuation. See that continuation. This is the Tuesday, and then this is a Wednesday, a continuation. So that's where the continuation come from. So basically the 4 breakout happen at either scenario. It's gonna be a reversal or it's gonna be continuation on high time frame. So basically you have break, reclaim, right? Because double top bottom in this case. But particular in this case, it's happened like a quad, more than 4 times. Break, reclaim 8, that means 4 times already. So the last time when it come down here at 8, 9:30, then boom, it's gonna be a real breakout. You can go all in right there. That's the reason why the 9:30 is a giant move, because a lot of liquidity around that area. So when it break real hard, and then down here it tells you that it's gonna make another leg down. You see that candle right in the range of the expansion, and it failed to break the level of the candle after expansion. 1, 2, 3 times, boom, it's the second leg down right here. Alright, so for Wednesday we see the 4 breakout type 3 right there, continuation, and it happened at exactly 9:30. So Tuesday is first leg down, or the first day down, and the Wednesday continuation. How it continue? It engineer liquidity exactly at 9:30. It flushes it down. we look in the detail, we can see that is the type 3 for breakout. Okay, now we move to Thursday. Alright, Thursday we took a very interesting trade. Okay, so we see some right here. At what do we see right here is a very typical break test from below and reverse. That's our type 1 right there. It happened at 10, and then at 11:30 right there we have type 2, which is a continuation. And you have what? Yeah, test from below, no, test from above, break and reverse. That's type 2 right there, type 2. So you have type 1 reversal and type 2 continuation. That is a textbook setup for us right there. So Thursday, two beautiful setup right there. Let's see what trade we take on. Okay, so let's see. Yeah, that's the end at the beginning of the Thursday, and then boom, that is the end. But let's see what trade we take. Okay, so we did engage right here. We go in just a little bit late, right? We wanted to go up right here. But for, yeah, we go late, right? It's side 10, right? 10:05, 10:01 much better. But anyway, we go in, right? Because it's the setup break test from below, right? The level is in high time frame. If you look on the Thinkorswim, that's what right here, that's the daily time frame. When we see daily time frame, yeah, right there, that's the level of daily time frame. Yeah, that's level. So we did go in, if that's right. Oh, where is our trade we took? Okay, so right here we go in, boom, wow, we have profit right away, boom, we take out, we just close the trade. That's a good trade. Let's see what else we see right here. Okay, so we try to short right here because we see the test from above right there. You see that level, right? Break test from above and reverse that. What we try to short, but let's see, did we go easy or wow, we didn't go easy. When we see that, we scaling, we add sign right there, boom, yeah, it go into our favor. Okay, and right here we go long, okay, beautiful. But here's the mistake we made. So when we go in, we put all on the table. We thought, okay, we see, because when we watch in the real time, you see the huge momentum. In our mind, the first thought that, okay, we put all in, then we're gonna take profit right away as soon as this candle close. But then when we saw this level, we get greedy, so we stay in the trade long than we're supposed to. So we have to stick with our original plan. Don't let the greedy get in the way and you stay in the trade longer than you're supposed to. That's the hero lesson. And look, boom, see that? We get back our gain right there. If we get out and with the profits right there, we have 14K right there, 14,000 for that day. I mean Thursday, perfect. But we make mistake and we learn. You see what happened? Okay, we say, okay, let's move our stop loss and look at this. and we learned a huge lesson. And we said, wow, let's move the stop, continue with stop loss. At one point, you see that the loss is humongous, 27,000 right there. But let's see, we know that, you see that it go down to fill the gap right there on the daily time frame, which is a high time frame level, and boom. So we know that it's gonna come back. It may not come back because the time, it run out of time. So keep in mind, the time is very key. There's not time enough to build liquidity to go up there. So at least we stay in the trade, and we still being a profit in that day. Instead of big profits of 14,000, we only profits of 15. At one point, we almost lost. See right here, the loss is 27,000. Yeah, 28 right there. So the lesson we learned is huge, that when you see this, right, it does not mean we have to take precaution, right? If you see in the real time that momentum right there on Thursday right here, so if you see the huge momentum, then just get out. Because we thought that, okay, on that day, right, if you look at what do you see? We thought it's okay, that level, head and shoulder right here is a break deep, and then right here it make a high, so boom, we believe it's gonna go hit this level. That's our naive right there. It did not. So that's huge lesson. Anyway, we have to wrap up here. Thank you for your time and interest. We always grateful for this opportunity. We do what we love, and either way, we do what we love, or even though we do what we don't like, we still getting better. So day by day, we're getting better and better in every way. Have a good night, and see you next week. Bye for now.